Good morning. Welcome to Equity Story Trade Watch, the 19th of October, Wednesday, middle of the week, so hump day. We've been obviously following closely this week's moves. We had a pretty good day yesterday. Markets yesterday were quite decent in the US. Can we follow it through? We just don't know yet, but we'll see how we end up by the end of the week. I've got Claude with me today, so that's good. That's the first time I think we're together. So welcome, Claude. I'm very, very excited to do this with you. We're going to be probably chopping and changing with Dave and so on over the next few weeks, whatever. But before we go on, I'm just going to quickly mention the actual disclaimer, which I should actually put on, but I can't find it, so I apologize for that. But I'm going to quickly say this is going to be just general advice only. And of course, everything we speak about today, it's all general advice in nature. Stocks wise, we talk about the actual fundamentals of the stocks, and we look at the actual charts as well, if we need to be. So just to start off at the moment, Claude, there's obviously a few announcements that have gone through. We're gonna have a quick chat about that. With the markets yesterday, I mean, is there anything that I suppose that you saw yesterday that caught your eye with anything either news-wise that you saw, or anything that's actually caught your attention from overseas?
Well, from overseas, you're going to ask. I was going to give you an Australian one. No, not from overseas. Haven't been watching closely on that. Of course, I think we talked about the Netflix numbers just before air, and I agree with you on that. Though I don't follow the company closely. Closer to home, what caught my eye best yesterday was actually a company that I think you were keen to talk about, which was XRF. XRF Scientific is the name. And this has just been a solid performer for many years now, and they're in the business of, as you know, providing sort of different chemical formulations to laboratories that need to test various samples of whatever rock it is. They also, I think, have a little sideline in selling crushing machines now that are helpful for that process. So that's like an interesting little business that probably it does fairly well during boom times for mining. So that's one reason to say, well, mining's pretty strong at the moment, so this is sort of a second order effect beneficiary. So I like that about it. And then secondly, look, based on the current quarter, which I think was 2.4 million profit. Correct me if I'm wrong, because I'm going off the top of my head. But, based on last year, I think it was about 6 million profit based on what we've seen so far. Oh, no, sorry, I beg your pardon. It was 2.4 million profit before tax. So we could really probably estimate at least 7 million in profit after tax, which would put the company on, or at least where it was yesterday, the share price, where are we today? Put the company on, I think, around 14, 15 times earnings, which is not outrageous for one with a good track record. I think all the directors own shares in it. It's a kind of little small cap industrial that I definitely like. One that I kind of wish I'd probably bought a while back now, but definitely a decent quality small cap in my point of view.
I completely agree with you here, Claude. So I think we've both got a big tick on this company. I've actually been, the fund for Equity Story has been buying this little XRF. And again, it fits my little criteria. It's small little growth, profitable, dividends as well. It's got a good outlook as well. When you look at through the actual numbers and the update yesterday, it was actually pretty strong. So
yeah, there was some strong commentary as well. I think they were saying they have an order backlog for 6 months or whatever. So the near term looks decent for them as well.
Absolutely. And then when you look at the actual charts, and this is, the dark arts of Dave's, it actually looks very good too. So, we talked about it very briefly yesterday, and I think there's a question on Ask the Analyst yesterday about that particular stock. Yeah, we like it. I mean, we're both pretty positive on it. When I think about should I be buying it now, is the question. Like I said, I mean, the fund had been buying some, so I don't mind buying some. But for the traders out there, the short-term traders, you can either wait for the end of the week, because normally we trade on the weekly type basis. But if you take it the longer term view, like a type fundamental more than a technical, you'd be buying this, because you said, I mean, it's not a demanding valuation wise. It's delivered pretty good. And Claude, I love buying stuff that delivers really good stuff, almost upgrades, and you think to yourself, there's a tendency for them to continue with that. Just like opposite is true when there's a downgrade. It usually comes not just one downgrade, it comes 2 or 3 or 4 downgrades in a row. So I find that it's easier for me to buying stuff that's got a positive announcement behind it or 2, and then this all gets on a roll as well. So
yeah, exactly.
I like that. I like that. All right, so that's one to talk about. I'm going to quickly go through some other stuff there, and I know you want to talk about a couple in there as well. So BHP had the quarterly out, and I put that up here as well, so people can see the actual chart. Look, at the moment, I think the BHPs of the world and Rios, it's having a little bit of a weak day today. And the thing is, overall, we talked about the actual space is that it's just weakening at the moment. It's not the best place to probably park your money. With a slowdown in growth globally, commodities tend to sort of suffer a little bit. So maybe cyclically at the moment, it's not a great time to be buying this sort of things. The only 3 things that we really like is lithium, was coal, and we talk about coal stock in a sec, and oil. And even oil now at the moment is maybe suffering a little bit with, I think, the news yesterday that Biden said he's going to release some of the reserves in the US. So that's probably going to put down pressure on oil. So now maybe it's, instead of 3 amigos, we got 2.5 amigos, so to speak. But we'll see how it goes. I think BHP at the moment, if you're keeping it for dividend, I understand. I mean, quarterly was okay. I think the reiterated the guidance on production actual costs as well, which is, in this particular market is pretty good. So you've got to give them a tick for that. But I don't think it's going to spike anywhere up, and probably it's not going to collapse. So I'd say probably sideways for me for BHP. So neutral to, better things out there. With that.
Probably a hold for a long-term holder if they're there for the dividend, but yeah, nothing too exciting.
True, agree. All right, so I'm going to quickly move on to the WHC, which is Whitehaven, and they come up with their production numbers and some cash flows. Now, we know that coal at the moment, this is especially thermal coal, has been absolutely going berserk. The problem is, so, you're probably thinking to yourself, can it get any better than this? I mean, this is like crazy. No one in the right mind, but a year or 2 ago, Claude, would ever think that coal would get to these sort of numbers, right? For sale. So it's just for me, I'm scared. I'm scared that this is going to maybe ease off a bit and so on. Even though the conditions for coal prices are still incredibly strong, this is such weird times and elevated numbers, unprecedented numbers, that it's always going to be risky for me to play this. However, I understand and I acknowledge that, of course, we've got, this sort of companies are coming up still crazy numbers and cash flows. So, while the iron's hot, keep playing it on the charts, no problems there. However, with WHC today, even though, they've received crazy prices for their own coal, they did come up with some negatives in that result today, which saw this morning a 5.3%, I think, start to the day, which is, you go, oh my God, what's going on? But, I think they're talking about that some of their production got affected by the wet weather in Australia, which is understandable. And they also warned that, further to come, this could be an ongoing thing. So I think, if you're trading this right now, I'd probably go, is it a profit time? It's had a pretty strong move. Maybe put it at $10. If it goes below $10, right there, you'd go to yourself, okay, time to maybe take a profit. So right there, take a profit and move on. This is just technical talk. Overall, I still think, generally speaking, coal still probably will be strong, but I'm very, very, very nervous with the prices. I mean, $500 plus fetching it at the moment, when normal times $80. It's crazy.
Yeah, right. I mean, it can't last forever, but at the same time, it's still lasting now, and it could last for longer than people think. So I agree with what you said.
All right. Moving on to MP1. I think a stock that we probably both had a look at, maybe slightly different views on it, which is nothing wrong with that. It's actually quite healthy to have a couple of different views. I'm a positive dude on MP1, and I think today, let me just have a look. What's going today? Up 10%, is that right? So for the week is up 10%. So I'm going to have a look for today. What's going on? Is it up or down? It's only up slightly for 3 cents. So the quarterly for me was actually, I'm happy with it. I don't have a problem with it. It's actually moving in the right direction. So overall, I see still positives. So it hasn't given me a negative to sell out of this. So I'm still keeping the view that if they can keep playing their cards right, and I know the market at the moment, especially investors, are demanding that a lot of these tech companies go into a, saving cash, turning into a positive cash flow type scenario, and becoming profitable as soon as they can, right? That's what the market's demanding. And if they're not, they're getting sold down and getting absolutely shellacked. Being a market darling, and I think you probably agree with it is pretty expensive still when you look at it. However, I've got that thing in my head, long term, liking the company. If they can basically get to that cash flow positivity, EBITDA positive, and sustain it, and then become profitable, I think there's a decent company here. So I'm still holding this as a result. The quarter didn't spook me, which is nice. And I was, I'm always nervous when the companies come up with a quarterly, but thank God today wasn't too bad. So I'm holding on, and I'm going to give it another quarterly and see where it goes. Have you got anything else to add to that, please, Claude?
Oh yeah, so I thought that the current, the most recent quarterly wasn't too bad. What would really make me super negative on Megaport would be to see the operating cash flow go negative. And it's not enough for me that it does have positive operating cash flow, because of course it does have quite a lot of property, plant, and equipment it needs to invest in, because it does need physical assets in order to do its services, need to be installed in different data centers, etc. Also, they spend quite a bit of money on capex of the intellectual property, the software that runs their system. Nonetheless, in the entirety of FY 2022, they had negative operating cash outflow of 16.3 million, and in the fourth quarter they had positive operating cash flow of 1.5 million, and now we're seeing today that positive operating cash flow improving to 2 million. This is also $2 million in US dollars as well, so bit more than that in Australian dollars. Of course, still got negative free cash flow overall. They had 6 million property investment in property, plant, and equipment, and then 2.5 in IP. So still a way to go before it's probably de-risked enough for me to be that keen on it. I'm not saying I would necessarily want to wait until free cash flow was positive and gushing, because at the moment they do have 44 million in bank balances, but we're seeing still perhaps 6 million plus burn per quarter, so they're not in a really bad space, but they're really not in the clear yet either. I'd want to see that the runway, if you will, extend out a lot longer and have a bit of a clearer path to make sure that they will get to free cash flow positive. Of course, the stock might have moved by then, so I'm not saying this is necessarily the perfect way to play it, but for me, that's what I'm looking for.
And that's perfectly fine. I'm taking the early extra risk with this, saying that they can deliver that. But I completely understand where you're coming from. And I've got actually some stocks that I'd probably want to wait with this one, market darling, really. So I'm taking a bit of a punt, but we'll see what happens. At least, the quarterly was actually not too bad. So from that point of view.
Yeah, look, and they've reduced their capex as well. So I think, look, who knows? It might just be a quarter-on-quarter thing. You need obviously more than one quarter, but there's at least some signs in the numbers there that they are taking those measures they need to get to free cash flow break even, and that will be a positive in my opinion.
Agreed. All right, and just going on the technicals on MP1 itself, the Equity Story Fund, as a disclaimer, we own some in the funds, and the chart is looking not great. I mean, obviously we picked it up as almost like a contrarian play after the big sell-off. We like it as a tech play, but you wouldn't be probably rushing into this technically at the moment at all. And probably, like with your fundamental view, you'd be waiting until it probably gets to at least $10 plus before you start looking at technically. Anyway, let's move on to the next one, and a little company called Veris, who came out with an update. I want to actually see how it actually reacted to this announcement this morning. It's a little space
up 5%.
Okay, that's pretty good, I suppose. And the reason I want to mention it is a turnaround story. It's been shellacked for a long time. I mean, that's almost like a penny punt, so to speak. But it is close to about 100 million in revenues. like I said, the margins are tiny, but they're improving their margins at the moment. You can see on that presentation today and the update today, they are moving in the right direction. So they've been turning the business around for a couple of years now. New management, because they had previous problems with it, they had to really come with a clean pair of eyes, sweep the whole company around, and trying to obviously reposition it. And they seems like they're doing a good job of it. It's growing its revenues now, because the last couple of years it's been pretty stagnant to negative. So that's improving. The order book is improving, and the margins are improving. So all those three metrics, then normally I look at companies, how are they going to go over the next 12, 24 months? That's looking positive. Now, is it the best company in the world? No, it isn't. Is it something that can shoot the lights out? Probably not. But it doesn't look too demanding when you look at if they can improve the numbers, especially the bottom line, because it's something that it doesn't need much improvement on the bottom line, especially when they've got margins that are so tiny, to see a huge improvements on the.
Yeah, there's a lot of operating leverage in there. You've got I think a decent chunk of the market capitalization in cash as well.
Yep.
So, and also in this update they gave today, they said that they made 500K ish profit before tax in this quarter. So if they managed to replicate that for the rest of the year, you'd be talking about 2 million profit before tax roughly. And based on what you said, I'm wondering, actually, do they have carried forward tax losses? I don't know that off the top of my head. But if you guys can do $2 million in profit, then probably it's quite cheap, because even though the market cap's a bit over 40 million, they've got like 17 million in cash or something like that, and they're buying back shares. So yeah, they're probably on, if they make 2 million net profit after tax, they're probably on like 10 times earnings. So not demanding there. So interesting little one. I mean, I've been caught out on playing turnarounds before. I think we talked about one of those last night. So, obviously just be a little bit cautious with the old turnarounds, but yeah, look, I think there's some potential in this one.
Yeah, definitely. And you're absolutely right. Be very wary of turnarounds. Normally, maybe previously in the gung-ho days, you'd go, yeah, okay, I'll take an early view on this. But it's been a couple of years now, the turnaround. So it's not as if it's just happening since last month or 2 months ago. At least we've seen now some data that's definitely pointing, and you can get more comfortable with it, that there is positive movement over the last 2 years. So I'm more comfortable with this, and it's a small one. I think just personally, there's much less risk in this than some other stuff around. But like I said, I'm still sort of trying to decide whether it makes sense for an investment or not. But it is interesting. Look, I'm of the fact that there is value in this. If they can actually improve, like you said, $2 million and even improve next year, this could easily double, right, without too much worry, if they can just improve the margin even further. So for me,
you could see it if they did 2 million in FY23 and then even managed it to get it to 3 million the year after, it'd be like 50% profit growth on a PE of 10, and you'd argue it'd probably it'll re-rate. You could see it re-rating to like 15 times that 3 million in the EV, which would be 45, assuming, depends what they do with the cash. But yeah, you could see good uplift in the equity, just taking it from sort of cheap to reasonable, but that does assume that it can hit the kind of goals that we've just talked about, which still isn't guaranteed.
Absolutely. So yeah, it's a play really on the turnaround plus the margin improvement, and if that happens, it could easily potentially have a pretty strong movement upwards. Anyway, what do we think of the charts on this one? So let's go to the weekly, and look, it's not too bad actually. Would you be buying this at the moment? I'm thinking to myself, let's wait it into the week. It just needs to get over this line here, and maybe around that between 8.2 and 8.5. It stays around.
Is it the green line or the red line that's the weekly there?
The weekly is actually, it's a good question. Hang on a second. I'm trying to work this out. The weekly is would be this one here. Would be the actual.
That one.
The black line. Yeah, that would be the daily, and that would be the really long-term line. That's what so it's above. It's above this. It's this one here. It's been obviously because it's been a laggard for a long time.
Yeah.
It gets over that long-term lines with the resistance, right? You think to yourself, well, it's back. It's sort of almost new investors coming in. You've got a new momentum, possibly something to look at for sure, because it's past. It's already this past, so to speak, on the charts.
Cool.
All right, let's move on to the next one.
Should we do AFL?
Yes, let's do AFL. So we've got 2 more to talk about, and then we'll call it quits. Let's do AFL because I know you like this one. I don't know anything about it, to be honest.
Well, I'm interested in it. I don't know if I like it, but it has come down a long way. I don't know if we can see that, but yeah, look, so what these guys have been, that the AFL stands for Australian Family Law, which is what it's been in the past. And I don't know why that looks weird.
Yeah, because I've got that long-term line, so I'll get me rid of that and we'll look a bit better. All right, so that's AFL, and if I go to daily, it'll be better to see that performance.
Yeah, there we go. Look, yeah, you can see there it's been on a long downtrend there. Look, when it was at 50 cents, let alone 60 cents, it was just absurd, and it raised capital, I think, at 45 cents or whatever. It got massively hyped on, just like popular with small cap investors, like in the era of like when there was a lot more finfluencers finfluencing away. This randomly got to be a bit of a favorite of small cap value investors. No idea why, since its actual profits was terrible. What they do is they just roll up. They're just rolling up law firms and legal businesses. And the pros and cons of a roll up. If you get it if you buy it at 10 cents right at the beginning of the journey, and then it gets a bit of hype behind it, it can go well. But the actual profits have never really been coming. This has never been impressed in any way. Massively overhyped, in my opinion. Literally all it is doing is rolling up services businesses. This is not a kind of business that really lends itself well to roll-ups, because obviously, the actual lawyers themselves can quite easily go and set up their own law firm. These guys like love to make a big song and dance about how, they do the back office stuff, and, they do advertising, and they do all of those things. And it's true, and that is useful, but it's very not hard for somebody to set up their own law firm, start, buying some ads, advertise it, and, pay for a secretary to help them. It's really, as it goes, not a high barrier to entry. You need just an office. You might need a part-time secretary, and then you need to know how to buy ads on Google or whatever. Probably not impossible to do for people. So yeah, pretty low moat there, in my opinion. But the big news today is that they have decided to do a merger with a company called GTC Legal Group. And this actual other one that they're doing with, they're paying for it with shares at this 20 cents price as well, I think. So you can imagine they've really done a number on the people that put in money at 45 cents, because now they're diluting at 22 cents or thereabouts.
Ouch.
Yeah. Anyway, so the GTC Legal Group shareholders are going to end up owning, I think, about 40% of the overall business. Now, they say it's going to be earnings accretive based on, the merger. They give us pro forma profit before tax numbers. So the profit before tax number for AFL itself was 950K, and this is like, and then the profit before tax for the GTC Legal was about 2K, which leads to about $2 million, I should say. So $3 million for the merged group, excluding acquisition costs and whatever one-off expense they want to do this year. And then they're expanding the market cap by around 40%. So currently around 17 million. So by around 40%. I do those maths right. Anyway, it's like going to be at 25 million market cap. And on top of that, they're inheriting around $10 million worth of debt from the acquired company, which sort of gives you a hint at why the GTC Legal kind of wants to do this takeover, because they've probably got they've got 3 million of profit and 10 million of debt. So they've taken on more than 3 years worth of their profit before tax in debt. So they've definitely robbed from the future there. Look, it doesn't look amazingly great as a takeover to me. A little bit interesting though, because we're talking about maybe an EV of 30-35 million after this goes out through the wash. If you've got an enterprise value of 35 million and we have a profit before tax of perhaps 3 million, and if we get a bit of growth on that or some synergies, maybe the net profit after tax gets to 3 million and the profit before tax is a bit higher than that. Yeah, arguably you could actually argue that if this does work, then what emerges on the other side might be quite cheap. I think, PE 10 is probably what you want to do, what you want to pay for a company like this. And look, it's not there yet. There's a lot of ifs before it gets there, but it looks like the business they've acquired is probably higher quality than the existing business they have, but it's just saddled with some debt. So definitely not signing off on this one. Definitely not saying it's good, but it's definitely got some big news, a big change for it, and maybe that'll start changing the story.
I tell you what, thanks for that, Claude. I've got a pretty long memory when it comes to disasters, and I remember Slater and Gordon, and I know what the similarities are between them, but law firms for me, first of all, I don't understand business model, how they actually operate and how the whip and everything else like that works. And I remember disaster with roll up again, Slater and Gordon back in the day. Holy moly, no thanks very much. I'll pass it on to some other people that want to invest in this, even though it's, like you said, maybe cheap on this acquisition.
But the thing is, it's not even cheap on the historical numbers, right? It's just cheap on the pro forma, forecast kind of thing that you might do. So yeah, I'm glad you brought that up as well, because perhaps I'm being pedantic, but in the announcement today, the GTC managing director, James Stephens, added, put simply, the merger of GTC and AFL marks the true beginning of the consolidation of personal legal service market in Australia. And I'm like, does it though? Does it? Like, you got Slater and Gordon, they do personal injury. You've got Shine Lawyers, which is a listed company that trades on, I don't know, around PE 10, I bet you. And that's a listed company. So, I'm not super impressed by anything about this. Look, I don't know if this number's correct, but I just looked at Shine and it looks like it's on a PE ratio of 7. So I don't know how the hype and everything continues with this Australian Family Law AFL thing. It doesn't look like it's there yet, but this is a huge step in the right direction. Well, this could be a game changer for them. Put it that way. That's all I'm saying. But I definitely wouldn't trust it yet. I want to see the cold. I want to see the cold hard profits.
I'm not touching this one.
Yeah.
I've just got bad memories from Slater and Gordon, so I'm not touching these things at all. Some things you just got to let it go to the keeper.
Yeah. Look, I think that's totally fair. The reason I got interested in it, years ago in the COVID sell-off, it got down to this tiny market cap at the time. It must have been less than 10 million, and it was 10-cent share price or whatever. And it's done raising capital since then. So it was just really one of the tiniest companies on the ASX. And I think that there was every chance it would be profitable. So I was just kind of looking at it way back when, because I was like, this is one of the smallest profitable companies on the ASX.
Fair enough. All right, just technically speaking, quickly on that one, it's a no on both the daily and the weekly. So this is a pass. So of course, we need to see a little bit more out of it technically before we actually get interested as a trade itself. So let's move on to the last thing, please, Claude. And that is actually, do we have 2 more or 1 more? ORG, quickly on that. And yeah, it is 1 more. So ORG came out with an update today, and I'm going to have a quick look today what the move is like. Just talking about the guidance for the next 2 years, especially next year, FY23. I think the EBITDA part of thing, they looked better, but it's probably just suffering a little bit because of their weakness in oil and gas prices. But at the end of the day, it's a big company. Really, if you look at the chart over the last 2-3 years, it hasn't been great. So there's not much excitement from my own point of view. So really, it's a pass for me. If I'm going to be playing this space, there's probably better things to play with. Saying that, technically speaking, again, it's just not quite there yet. I don't believe on both charts. You can see it's just struggling under those trend lines. So yeah, pass on that. Now, is there anything else that you can think of, Claude?
Well, I wouldn't mind a quick glance at the chart of DSE, and then we'll wrap it up.
Okay.
This is Dropsuite. They reported their quarterly yesterday. Look, I'm not saying they're cheap, and I don't love them on the fundamentals, but I just do note that these guys have been definitely heading in the right direction. Looks like they're going to do free cash flow this year. They've got 20 million in the bank, so they look like this company just seems to me like it probably won't need to raise capital anymore. Still pretty under the radar. Has been, around the same share price for quite a long time. Bit on the nose, of course, these sort of tech stocks. Not saying it's super high quality. It's not. It's quite frankly not. I don't own it, but I just think that you cannot argue with the fact that it's been heading in the right direction.
Well, funny you mentioned that, Claude, because we actually own it in the fund. We see one of our favorite stocks.
Oh, there you go. Well, there you go. Well, I didn't know that either. So, yeah, look, I mean, my concern is that, of course, their real customers are the managed service providers, which tend to have a fair bit of power. So some sort of powerful customers there. Of course, that means their margin on their product is also lower. It's also a product that has hardware costs for them to supply. So again, you just end up with lower gross margins than some tech businesses. But yeah, look, the takeaway from me in the most recent result is it continues to move in the right direction. And ultimately, that's what you're looking for is companies that are improving.
Exactly.
And so I can't deny that about it. And that makes it interesting to me.
Yeah, look, and that's exactly, I suppose, the thesis why we like this company. So we like it because it is improving its numbers, right, on a quote-unquote basis. We spoke to the management. We did a video with him. It seems like the company is well run as well. They put up emphasis on the actual cash flows too. As you can see, like you said, it's got positive cash flows in there too, which is a big tick in the box in this day and age when, a lot of companies are just bloody kept raising and raising and raising. And like you said, 20 million bucks in the cash. Hopefully they don't have to raise again because of the good balance approach to, to the business.
Yeah.
And the last thing we really like about this is that's, classified as a cybersecurity space. So, it does backups.
Yeah.
For things. So it is, while it's maybe,
it's a long-term tailwind, and I completely agree. Like, I really like, that's one of my main criteria that I add, and not everybody does, is not always, but if I'm going to have a long-term investment, I need to see a long-term tailwind there as well.
Correct. And that's why we sort of, haven't fallen in love, but we like the story because it's been delivering. It's been consistently delivering for us, and the chart actually looks pretty good. So those two things, we kept it in our portfolio, and it's been probably one of the stalwarts that's actually survived this whole cull over the last 6 months. That actually quite well. This one, it's actually looking good. So maybe at the end of the week, on the back of this, we might be looking at a buy, Claude. So thank you for mentioning that. Really like it. We talked about it yesterday. So reiteration on that again today. Let's see what happens. It's looking good. It's in the right space. Hopefully it gives us some returns. Alrighty, on the back of that, is there anything else you would like to add?
That's it. I got to bust a move to the next thing, but I've enjoyed doing this show with you, Peter. So thanks a lot very much for that.
No, thanks for that, Claude, and hopefully we'll do it again. Thanks, guys. We'll see you again tomorrow. Enjoy your day.
Have a great day.
Cheers.